So you clearly feel a little confident, or more confident then about the year ahead. You're increasing the dividend. Tell us about your outlook.
We've had a really strong first half. I'm very pleased with the performance across our three divisions: data and analytics, capital markets, and post-trade. We have had income growth in the first half of 4.6%, and in the second quarter of 5.5%. So nice trend there. And EBITDA growth up over 9%. So from a financial perspective, very strong performance. And then we have just gotten a lot done in this first half. We closed on the Refinitiv acquisition at the end of January. We completed the sale of our Italian assets, the Borsa Italiana, in the spring. We took the proceeds from that and paid down approximately £4 billion of debt, refinanced our balance sheet. And we are also making terrific progress on our integration of Refinitiv. We announced this morning that we are ahead of plan in terms of our cost synergies, and we're raising our year-end target for cost synergies from £88 million up to £125 million. So great progress there, great progress on the revenue synergies, on the operational integration. Really pleased with the first half performance.
OK, yes, on the subject of Refinitiv, if I could just ask you a bit more about that then, David. You've given us some lines, interesting lines, I think a new outlook on costs there, because there had been concern that perhaps the costs of integrating Refinitiv were building, and I wanted to ask you whether your outlook on that front had changed since March. Give us a bit more detail then on how things are looking on the cost front.
No change in our guidance. Other than the fact that we are ahead of plan in terms of our cost synergies. So as we indicated to the market, we are investing in the business and focused on that integration with some targeted investment in a couple key areas. But as the synergies numbers would indicate, we're making really good progress on the cost synergies. We've raised that year-end target, and we look forward to continuing to execute. So great progress so far.
So the challenge is to integrate the business. Do they look any greater or lesser than they previously did, or have they not changed?
Everything is right on plan, with the exception of the fact that we're a little bit ahead of plan in terms of the cost synergies. But we had a really good understanding of what this integration would look like going into it, and we're now very much in execution mode. So we're delivering on that. We've seen a strong performance on the top line in terms of the revenue. We've had good control on the costs, and no change in our guidance in terms of what the costs will look like throughout this year. And we've also no change in our guidance in terms of the CapEx. But again, really pleased with the performance so far and feeling good about the execution going forward.
Can I ask you about clearing regulation? We are less than a year away from the clearance equivalence decision expiring, I understand. David, do you expect the EU to renew that? Do you have any insight?
We continue to engage with the various EU stakeholders, whether that's ESMA, whether that's the European Commission, the European Central Bank. And our clearinghouse, LCH, continues to be critical to the EU domiciled customers and members who use it. We've seen no change in terms of the amount of volume, the amount of customer flow that is cleared. In fact, we've had 47 new clients sign up for SwapClear in the first half, so continuing growth there. And we'll work with the European Union stakeholders. We are optimistic and we are hopeful that we will get to a point where we will continue to be able to serve the EU members and customers for whom LCH is really critical to their business.
What is your contingency plan, David? Do you assume in your planning that you may lose business, or do you have a plan to try and clear the business yourself within the EU? What is the contingency plan?
So LCH Limited continues to be absolutely critical to our EU customers and our EU members. And as I said, I am optimistic and hopeful that we will be able to continue serving our EU customers. There's been no indication from our members and from our clients in that clearing that they would like to have any fragmentation of the liquidity pools that are beneficial in clearing. As I said, we've seen growth in our client base over the past half year, and we continue to work with the European Commission, ESMA, on their evaluation of potential extension of the recognition to permanent recognition.
But you don't have any current plans to clear the business yourselves within the EU, to set up some kind of operation there? That's not in the current planning?
We have a separate clearinghouse in Paris, LCHSA, which clears other products, but we are not planning on any shift at this point. So we continue to focus on the strong clearing in LCH Limited in London and the separate clearing of other products in Paris through LCHSA.
OK, so that's the role of Paris. Let me ask you about the role of public markets more broadly, stepping away from the numbers, David, just a little bit. We've covered a lot of stories here on Bloomberg TV about private equity in particular coming in to snap up assets, publicly listed, publicly traded assets here in the UK. And some people are suggesting that maybe public markets are not very good at valuing these, and PE sees other value. Do you have any thoughts on that, about how good public markets are at valuing UK assets at this point?
I think public markets are, in general, very good at gathering all the different signals from the market, from investors, and really finding the best form of price discovery. There are always going to be periods of time, sometimes relatively short periods, sometimes longer periods, where there may be different views on what the appropriate valuation is, and that's really what makes a market. So we've been very pleased with the performance of our markets this half. We've seen more issuance than in any year since 2014, so very robust growth in our listings. We've also seen a number of tech listings, which is very welcome in the market. So very successful first half from our perspective in the market. I think there will always be different opinions on what the appropriate valuations are.
OK, another subject that seems to be of interest to those in the listings industry, David, is that I understand the NASDAQ is waiting for SEC approval. It wants to bring forward some rules that will stipulate a number of women. I think it's one woman on boards of companies that are listed on the NASDAQ, and similarly for other underrepresented groups to stipulate that those companies need to have some representation. Are similar conversations going on in London? I know there's always been, or there's often and recently been attempts to diversify boards, but anything like that, anything more formal?
Well, we already have a number of very useful and important targets in the London markets in terms of having 30% or more of our board directors being women. There's a Women in Charter Finance, the Women in Finance Charter. A number of different areas where we have made a lot of progress in terms of diversifying both the boards and the senior leadership. And within LSEG, we have, I believe, 40% of our board is female, and we are moving towards a 40% target in terms of our senior women leaders. I think the FCA is giving this some thought as well as to whether there's anything that they should put in place that is more specifically prescriptive. But in many ways, this market is already making very good progress in that area.
David, one thing, just finally, another topic of conversation that really interests Bloomberg viewers and terminal subscribers is the whole conversation about return to office. What are you thinking about that at the London Stock Exchange Group? How much of your business is back happening at Paternoster Square and other of your locations? And specifically, can you tell me, are you getting involved in the discussions around whether staff should be vaccinated or not? Just give us your updated thoughts on this.
Well, first I should just point out we have a presence in over 70 countries. So we have to be cognizant of that when we're working through our return to office policy. In some markets, it's safe. In other markets, we have to be a little bit more careful as the pandemic is at different stages in different markets. Throughout, we have been prioritizing the health and safety of our people. Now, our general view is that we are an office-based culture. We want to make sure that we do have an opportunity to get our people back in the office. But at the same time, we recognize that there are benefits to what I'll call hybrid working and having more flexibility. So we're working towards a model where we will have hybrid working. People have more flexibility to work remotely, but an expectation that we'll be in the office most of the time, call it 3 days a week. That seems to be landing well with our people. And that kind of flexibility combined with the benefits of being able to work together live in the office. And just a few of the benefits of being in the office, as I mentioned earlier, we're integrating Refinitiv. it's really important to be able to have our people together, learning side by side, building a common culture side by side. At the same time, we want to maintain some of the flexibility of the remote working that we've seen over the past year and a half. So that's the approach that we're taking.